What's going on, guys? Benny Childs, founder of the Teach Me to Fish Effects trading community, back with another market outlook for MNQ. That is the micros for the NASDAQ 100 Futures Index. We're going to hop into it. I'm outside today, so you hear the birds chirping and the neighbor's dog barking, so it's all good, right? All right, I already have it marked up just to kind of expedite the video time. So let me just explain to you what I have on the screen, and you may not need as much. But here, starting out on the weekly, I'm showing that last week's candle closed below the previous week's low. So my initial target, let me blow it up for you guys. My initial target for the week is going to be 18,006.25. All right. I'll take a quick look at the dealing range for the week. So this is where we've had our first sweep of liquidity on this leg pushing up. So my fib is going to start here, and this will be the very last point where we had a sweep of liquidity as well. All right, so the top of the fib is going to go there. Just gonna give us a equilibrium for the dealing range of $16,639.25. All right, so I'm kind of somewhat expecting the market to come down uh, to that price point or below it, um, just to allow for discounted buy-ins. Okay. If we take a look below there, we have two um, fair value gaps that have not been mitigated. All right, these two here on the um, October 30th, the week of the October 30th candle, as well as the week of November 6th candle. So it's very possible that we could see the market come in to mitigate or to rebalance these fair value gaps. We also have an order block here. I'll draw that out, but it's not that important to me right now. Um, so we have the series of down close candles right here. So this would basically be our bullish order block here. So we could see price come down into here. It does not have to. It doesn't even have to come down into discount, but that's typically what the algorithm does. So that is the dealing range. That is where I'm looking for the market to possibly retrace back to. Um, why do I think that we'll get a retracement down to that point? All right, still sitting here on the weekly, we see that this is a bullish order block here. All right, and we can see that last week's candle did close below the mean threshold. So it closed below the mean threshold. We also had a change of state in delivery when this candle closed below, excuse me, this bearish candle closed below this bullish candle as well. So I'm expecting the market to go down. All right, let's drop down to the daily and see what we're looking at. Now, if we know that the market is going to go down, um, typically we can expect for the market to retrace back up um, to mitigate any type of objectives, whether there are for fair value gaps, order blocks, volume imbalances, things of that nature, before the market heads back down. We see here on the daily, we had a close below this swing low as well, indicating that the market does want to go down a little further, as well as we have a daily fair value gap that the market closed below um, the consequent encroachment of that. So still expecting for that to push down. All right. And then also here on the daily, we do have one, two volume imbalances that were created. And so we could see the algorithm push back into these to mitigate these or to rebalance these as well. I look at the volume imbalances as um, basically it's an imbalance. So fair value gaps are imbalances, uh, volume imbalances are imbalances. So we're looking for the market to come back and balance those. Okay. Was there anything else on the daily? No, nothing really on the daily, other than now we do have this order block right here that we could see the market pull back into. So if we just grab that and just so I don't confuse you. All right. So we could see the market pull back up into the 50% or the mean threshold of that order block. All right, which would mean that it will have to trade through these two volume imbalances as well as the daily equilibrium or daily dealing range equilibrium. So basically, if we take our fib and go from this swing high because it swept liquidity to the left down to the our very last point of trading, we'll see here that we have equilibrium of $18,345. All right. So again, if the market is going to push back down algorithmically, um, it likes to trade up into premium before trading down. Okay. Let's take a look at the 4 hour. Let's see what we see here on the 4 hour. Let's go ahead and get rid of this order block. Okay. So we do see where we have a 4 hour fair value gap that has not been mitigated. So the 4 hour could touch all the way up into here. And let's just draw out our dealing range again. I know you guys really can't see it, but the main thing I have highlighted here is the 50%, which would be the equilibrium. So um, what do we have above that? We have again we have the 4 hour FVG or SIBI, as well as the daily volume imbalance. Okay, we also have an order block here, uh, this series of closed candles. Okay, we have that on the 4 hours. So we have a lot of different confluences stacking up on top of each other to see the market pull back up. Now, it doesn't have to, but these would be some great places to be able to take some sales. Okay, let's drop down to let's go back to the daily. Um, the daily Friday's candle closed below Thursday low. So Monday, again, Monday initially, I would be looking for $18,006.25 to be hit at some point, but it does not necessarily have to do it right away. Um, it could be Tuesday, it could be Wednesday before it hits. It just all depends on the objective of the algorithm. So we just kind of, well, for me personally, I just like to take note of the different PD arrays or points of interest um, to look to see where I could possibly take trades out of. Okay. So let's drop down to the 1 hour. Let's see if the 1 hour gives us anything else. I mean, we pretty much have it for the start of the week, our objectives, but let's see the 1 hour. I mean, it would be the same dealing range. Um, technically, the 1 hour would be the dealing range for it. This is the last place or the first place, if you will, that liquidity was swept. So my dealing range would start there. Pull it down. All right. And then we also see here that the equilibrium um, for the 1 hour dealing range is sitting at $18,256.50. What do we have above that? We have a fair value gap sitting here above there. We actually have two fair value gaps on the 1 hour sitting there, as well as the daily volume imbalances. Um, so the market could just push up into the 1 hour equilibrium, right, and head down. It does not necessarily have to go into OTE, but the 1 hour OTE is lining up or stacking up the confluences for the daily volume imbalance as well as the 4 hour equilibrium that we were looking at. So, I mean, that's pretty much it, guys. Starting out for the week here, and let me just do uh, slash Monday sell side draw on liquidity. All right. So starting out for the week, um, my weekly target, my weekly target again is $18,006.25, as well as Monday's draw on liquidity. It's going to be that same price point. So we'll be looking for the market to hit that, and it's very close to it. So it's very possible that it hits that first, and then pulls up, and then maybe turns around Wednesday, Thursday, before heading down lower to the weekly equilibrium of $16,639.25. So, all right, guys, that is my outlook for the beginning of the week. I hope this has helped you guys to, um, I don't know, better see your charts as well. I hope it helps your trading, and I will tap in throughout the week, um, just to update you guys on the various draws on liquidity or targets that I'll be looking for. All right, and also to let you guys know, Apex is running a discount as usual. See, they are currently doing 80% off evals and 1 day to pass. So that's pretty cool. My last two 50K evals I passed in 1 day. No, actually I'm lying. The second 50K eval I passed in 1 day. The other one I passed in 2 days. But take advantage of whenever Apex is running these specials, as well as altering the rules for eval passes. So if you know what you're doing, you can kind of go full throttle in your contract size and go ahead and pass. So there's my code right here on the screen. If you guys don't mind, you can put in this code to get that 80% off with the 1 day to pass, or you can just click the link that I have in the description. All right, guys, until next time, I hope you all stay well, and I will talk to you later. Bye.